Well, maybe you thought it was going to be a sleepy Tuesday, but we got a merger blocked, crushing some speculative fever. We got 13 Fs with the two Bs, Buffett and Burry. Home Depot, should we start worrying about the consumer? China stocks on the move. This is pre-market prep. Let's get things started.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, good morning, traders and investors. We're stuck. We're in the 41.40 handle again, down 6 handles at 41.44. The buck in the red just by 15 cents at 102.12. Bonds up 5 seconds at 129 and 30 seconds. That's a lot of 30 seconds. Crude in the red by just a couple pennies, 71.09. Gold clinging to the 2,000 handle, down 12.80 at 2010. Let's just call it. And silver just a tad under 24, down 32 cents at 23.97. Bitcoin futures, they're down $375 at 27,100. Let's bring on Triple D here this morning. And Triple D, I mean, you probably had a little bit of fireworks after the close yesterday.
Yeah, 13 Fs. I mean, they were popping off all over the place. But right after 4 o'clock, we got the Buffett one, and you saw Capital One Financial just blast off into orbit. You knew even before it was released, COF, I was like, oh, it's got to be Buffett because there's no other news here. And then boom, the 13F, you see it. So Capital One, obviously, Buffett took 3 new positions. Capital One is the one that everybody is talking about.
Okay.
2 smaller new positions, DEO. Which is Diageo. ADR trades overseas, so not moving as much because I'm not sure they care about overseas as much about Diageo as we do about Capital One here. And then Vitesse Energy, VTS, he also took a new stake in that one. So, and it's up 4.5% this morning. So you got 3 new stakes here for Buffett. Lots of other action here.
Capital hey, Dennis,
One,
let's bring in let's bring in Aaron here. Let's bring in Aaron Bree is helping out on the desk today in the Benzinga headquarters. Aaron, how you doing today?
I'm good, Joel. Dennis, how are you guys doing this morning?
Good. Aaron, how are you? Nice to see you. I love the background there. Like all the green trees.
Yeah, some foliage.
Spring is there.
And he doesn't have a raggedy T-shirt on like you, Dennis. He actually put on.
No, is it raggedy?
I don't know. I mean, this is. No, that's
straightening
okay.
out here a little bit.
That's okay. That's okay. But
I do like it, Joel, when you wear. I like it, Joel, when you wear the Mizzou shirt.
I do wear a Mizzou. You know the story because but it's getting warmer out, so I had to do the switch.
Is your niece or something?
My niece, my niece that made me a great uncle. Do you know I'm great at a lot of things, but I'm a great uncle too, as a month ago. But so Aaron's gonna be helping us out this week, and we did the 13 Fs. COF, a new stake, as Dennis mentioned. We popped to 97. Woo! And now we're getting a lot of price discovery here at 95. This stock is Warren's buying the dip in this one. I don't see. Oh, man, this is a tough one. Do we have I always like to look for a daily high, see if there's something to coincide with that 97. And we had a high at 97, 48, 98, 20. As always on these things, I won't do you got to get to the pre-market high. And I'm not buying these things. This VTS is a new stock. I haven't seen Warren in a new stock in a while, but just follow through. You want to see follow through the pre-market high. And then what was the third one that you mentioned, Dennis?
Diageo.
Okay, yeah, that's
DEO.
DEO.
That trades as an ADR, so that's obviously already trading actively and being held in by your high-frequency market makers from the overseas action.
Aaron, did he sell some stuff?
He did sell some stuff. Let me get so we had stake decreases in Chevron, CVX, We had some stake decreases in Activision Blizzard, ATVI. So ATVI also has the news with the acquisition with Microsoft, which was actually, it's been kind of held up in Europe, but I think just got an approval. And then Kroger, ticker KR, a stake decrease in there as well. And Bank of New York, ticker BK,
Out of the
as well.
banks. Yep.
Yeah, a lot of the banks. So Ally, ticker ALLY as well. 2 bank stocks there, Bank of New York and Ally Financial, as well as Taiwan Semi. So semis have been pretty hot. I think you guys have talked about in the show before how Taiwan Semi kind of hasn't been ripping as hard as NVIDIA or AMD, which is surprising for some people because TSM is the biggest manufacturer for all these companies. But Buffett trimmed his stake in Taiwan Semi as well as US Bancorp. So definitely some sells in that 13F as well.
Definitely a theme here, lightening up on the banks. So we were looking, and the market was hoping that maybe Warren would get down and dirty and actually buy some of these regional banks, giving up confidence. The opposite has occurred, and he has actually sold completely out of his U.S. bank, completely out of BK, lightened up ALLY. So it looks like instead of buying, Warren was actually selling regional banks here. So Warren, not as comfortable maybe with the regional banking situation as Michael Burry is, because Michael Burry, if we go into this one here, actually yesterday was announced that he is adding, and he bounced into a few of these regional banks, and it was really giving a lift to a lot of them. So I don't know if we have the actual, Aaron, if we have 13F from Michael Burry, but I'm going off my memory here. I know he added some PAC-W. He actually bought FRC last quarter, which we know would be a loss here now because it went off the board worthless. So I think he's regretting that buy. And there was a couple other ones too that he nibbled into in the regional banks. Do you have them, Aaron?
Yeah. I'm pulling up Burry's real quick, but before we move on from Buffett's 13F, the one thing that kind of sticks out from me is that it's not as if he's avoiding the financial sector altogether, right?
Correct.
Buffett sold some of these banks, but bought Capital One. So now that gets me thinking, what about Capital One's business does Buffett like right now compared to the regional banks? So maybe, the credit, so some different things in the financial industry that Buffett likes right now, just not the regional banks.
And bought more Bank America as well.
Yep.
So going into the majors, and maybe we see this migration from the regionals to the majors continue. I think we do. I think there's people who are nervous about having their deposits at these smaller banks here now after they saw what happened. And I do think the majors are the beneficiary there. So I'm not surprised by the Bank America purchase here. Capital One is a little bit surprising. This has been beat up, so he is giving a nice vote of confidence. It's a stock that is significantly off of its highs it just made in February at 123, down to $89, $95. We did talk technicals a little bit here, Joel. I don't know. I mean, it's kind of hanging out 94 to 95 here. Does the Buffett pop eventually fade, or does this one get followed?
They usually, I think a lot. This is a wild one. This will trade all over the place, and I think right now just kind of like market circumstances too, right? You got a nice rally here. A lot of times, if you're patient, it could come in. If you feel like you got to be in right now, I think I wouldn't go all in right now. I think you're going to get to see, some people just could be rigging the register, just thinking, wow, they were, bottom fishing under 90. What better news can you get than Warren Buffett coming into your stock? So it's interesting. I wouldn't be chasing it up here. And I mentioned the targets on the upside. You're right, going to the big banks, going to Bank America. That got a little bit of a pop, but that's such a big, thick stock. It's not reacting as much. The CVX sells a little bit interesting. He bought that good and it's been selling into it. Dennis, nothing in Oxy. Were you disappointed in nothing in Oxy?
He added to Oxy. We knew
he did?
Yeah, he added.
Really?
We've known he's been adding to Oxy because we get the filings every 48 hours every time he's adding because he's so high of stake in it. So yes, he added to Oxy. I think he will continue to add to Oxy here too. We have not seen any more Oxy purchases here in the last couple of weeks, but we get those a lot quicker than 13
in between. Okay.
Yeah, but he added to Oxy as well. Do we have all the ads here, Aaron? There was other ads as well. So he added to Oxy, added to Para, P-A-R-A, which was already leaked. That was leaked yesterday. So if you're wondering why PARA is not up, I believe it was Barron's that figured that one out. And they said, or somebody, was it Barron's yesterday that leaked that? Somebody
Barron's was
figured it
talking
out.
about
Somebody guessed it.
It was
that
Barron's,
he had bought more Para. So it was already up 5% yesterday when we did that, when we were just on your show there at the closing print there, Joel. We were talking about Para being up 5% into this. So the market kind of knew that one already, and obviously the market kind of knew Oxy too because we'd seen all the filings. But there was a couple of other ads in there. We know Bank of America, I just said, and it was trading up higher on this.
Yeah, there was also a stake increase in Apple and Louisiana Pacific, ticker LPX.
Okay.
The position was established last quarter at prices between $48 a share and $65 a share. So LPX, another ad there. Apple, Paramount, like you said. So yeah, I mean, Buffett definitely an active quarter.
I think, and people asking, what about the others? The one thing that we've realized over the course of the last couple of years is there's some movement from some of the other activists, and from some, if you get an activist position in there, from the other hedge fund managers, it's just crickets. You just don't see the movement that you did before. I know a couple people took a stake in Google. It's up hardly nothing off of this. I mean, Buffett is pretty much the only 13F that is really market moving lately. Again, Michael Burry can move it, which maybe we can move on to that now, because obviously, the big short investor there, and he took, stakes in the regionals, which popped those yesterday here, Aaron. Let's talk Burry.
Yeah, so Burry, the full list of Michael Burry's ads. Let me go ahead and get that pulled up. But we had PAC, W, FRC, Western Alliance, ticker WAL, which is getting a nice bounce. But I mean, yeah, like you said, FRC, we know that one, at least right now, looks like would have been a loss last quarter that he took up, which we've seen that with Burry, right, over the past few years, that he's been wrong a few times, right? Like people hop in because Burry's got this big name from the Big Short. In 2008. But Burry's been wrong a few times over the past few years, and like he's purchased stocks that other people have followed him in on, and then ends up not being a great stock pick. So it looks like FRC was definitely one of those. So glad we didn't get that when it came out, because maybe some other people would have gone out and bought FRC with Burry and would have been burned.
What about China? I guess we could Barry cat, but he's not afraid of China. Let's do the Baidu earnings, and then let's talk about him getting down and dirty in some Chinese stocks.
Yeah, so Burry basically doubled his bet in Alibaba, and as well as I believe Baidu. I'm still trying to get the full 13F from Burry pulled up, but these China stocks have been decent. I mean, they've been holding up, Baidu and Baba, over the past couple weeks at least.
Big pop in Baidu. Do you have the earnings numbers on Baidu handy, or not really relevant? Popped to 134. That was a nice move. Had a nice rally into it. Back down to 128.5. We are, quite a bit of price discovery here, so hard to trade it. Technically, first things first for Baidu. If you're looking, this does fade a lot off. Sometimes it's overnight moves. Yesterday's high 128.95. The Baba moved yesterday, and wow, they gave you a couple days to get in between 80 and 82 here. Is this the turnaround? You're going to try and buy the dip in Baba, Triple D?
I was just actually talking with the chat here, just going back to Buffett for a second, because we said incorrectly that he hadn't been buying Oxy lately. I did not even notice his filing from last night. There was a filing from Warren Buffett last night at 9:27 p.m. Buffett bought another 2.1 million shares of OXY over the course of the last 3 days. So on the 11th, on the 12th, and on the 15th. So he is still getting down and dirty and buying more Oxy. That's why Oxy was trading up here a little bit this morning, but not getting the Buffett pops that it was getting before. Going back to BIDU, I mean, we've talked about the China trade. It has been beat up. It has, bounced in the last few days. Baba hit a key support level of $80, which we talked about. Baidu has been down there trying to form some support. And then JD, a little vote of confidence here for JD, and it's starting to show some life here too. So the China stocks are showing life. The problem is it seems like they show life for a few days, and then they start to leak here again. So You're hoping, you could get a sustained rally here. If you're looking for some stocks, though, that, haven't participated, China stocks have not participated really at all in the recent rally. So could this be the start of something? Maybe.
Pinduoduo. Oh, I'm sorry. I just gonna say Pinduoduo is trading down. That one put in a hard bottom there at 60. So if you think that's gonna be a lasting bottom here, you had a nice move from 60. Let's call it 60 to 66. That's pretty easy, right? 16-point move. Half of that is 8. Maybe get that at 50. Excuse me. What was that move there? Oh, that wasn't that big of a move. 60 to 68, maybe the 64 area, 64, 4.5, 65. Go ahead, Aaron.
I was just going to read the numbers from Baidu's report. So earnings per share came in at $2.34 versus the $1.79 estimate. So a big beat there, as well as a sales beat of $4.54 billion versus the $4.31 estimate. So double beat there on Baidu. As well as, again, I mean, you had the Burry bets in the 13F doubling down the stake in Baba. Burry also wasn't just Buffett. Burry also added a stake in Capital One. So Capital One, got the double whammy of Buffett and Burry. Those are probably the two biggest 13Fs that the market cares about. So to see Capital One on both of them, that's a pretty big deal, right?
It's a big deal for Capital One today. And again, multiple people in chat, why don't we talk others? I mean, we had Ackman take a couple positions. Let's just do an example here. Do you have the Ackman filing here? I'm going to throw you under the bus here.
Well, we get him. I did have that one pulled up. I have it right here on my history.
I believe he took a stake in Google. Was it Ackman that took the stake in Google? What we have seen happen, and I trade these actively, these 13Fs. I've traded them for 20 years. It used to be like, oh, what's Icon doing? What's Ackman doing?
Oh,
and there was other
Icon.
ones, we'd look Globe. Oh, okay, well, wait, what's and we bounce over into
Tepper.
this one and this
Tepper.
one. What's Tepper doing? What are those doing?
Yeah, Pershing Square.
Yeah.
Or sorry, go ahead.
I was just going to say, I used to bounce through all these and they'd all be moving. I'm like, oh my goodness, this one took a stake. What has happened in the last couple of years is crickets from the other ones, where they're just not moving. And nobody seems to care except Buffett. Even look at what's being covered. So Ackman did take a stake. Let's go with Ackman here and just
$1.2 billion position in Google. Dennis, is that similar to how back in the day analyst ratings used to move stocks more than they do now?
It depends on who it is. Again, it's like, I don't know if things have just changed and social media has changed and people, gravitate to talk about certain things or care about certain things. But, Icon used to move stocks more than just as much as Buffett. And if Icon does something now, nobody cares. I mean, Ackman takes a stake in Google. It popped up a little bit on that initial filing and comes right back down. So you could say, oh, it's up 0.14%. But, you got Microsoft up today. You've got Tesla up today. You have a lot of tech, actually, and that's the rotation from Home Depot, which we'll get to in a second. It's amazing that the other activists and the other hedge fund managers, the big ones, Ackman's solid. I mean, he's been solid. But what else did Ackman do? Did he do any smaller ones? If they buy a smaller one, it might move. But they just haven't had the action that Buffett gives. Do you see any other ones, Aaron?
No, I'm pulling up Pershing's full 13F here. Google. That was the big one from 13F, or from Pershing for sure.
What about Icon, man? That guy. What about that?
Oh, the stock.
I
mean, now is rumors of SEC investigation. Obviously, we had the short seller report that really kicked it off. But maybe there's something to it because the SEC is taking a look here now too. I mean, problems here. And the IEP has just been an absolute disaster of an investment for a very, very long time. I mean, you're making multi-year lows here, in a market in the last 7-8 years where we've been going straight up. This Icon Enterprises has not. So it's got the huge dividend, and you wonder, and it's been paying a dividend, and you wonder if that's sustainable. 23%. You got to think it's not. But wow, IEP has just been an epic disaster.
We got another disaster to talk about here, and
Yeah.
it's in the earnings. And if we're worried about recession, we're worried about the health of the consumer. They're not shopping at Home Depot. What do you have for us, Aaron?
So Home Depot reported earnings this morning, and it was the company's biggest miss in 20 years. Sales came in at 37.2 billion versus 38.3 billion dollar estimate. The sales down 4.5% year over year. Customer transactions down 4.8% year over year. The average ticket, so the average price that people were paying, was actually up about 0.2% year over year. But of course, with inflation, that's not saying much. Home Depot lowers the fiscal year 2023 outlook. Sales and comparable sales to decline 2 to 5%. And then EPS declined 7 to 13% versus the 15.74 estimate. So not only did you have not great numbers in terms of the EPS and sales, you also had the company giving poor forward guidance, which honestly, like, what's the stock down right now? 2% pre-market? Like, I'm surprised it's not getting hammered a little bit more.
I think Jeffries hit the nail on the head here. And, I was thinking the same thing. Everybody was expecting this. So, I mean, if you look at what Jeffries is saying this morning, they were saying that, yeah, the quarter was bad, but I think it was Jeffries. I was just looking at a couple of analyst commentary. Sorry, Jeffries, if that wasn't you, but I did just see an analyst note go by on this. And they're like, this was expected here, that the Home Depot quarter would be a disaster. And it was. So, I mean, not completely expected because it is obviously still down 2.5%. But I think everybody realized, lumber prices have been going down. We're hitting, back down to pre-COVID pricing here. Obviously, huge sale. You think about, you're not selling your 2x4s for $12 anymore. You're selling them back for $3 or $4. So, I mean, some stuff has come back down to earth. It is a sign, and you could extrapolate if you want to, that potentially the consumer is slowing here a little bit too. Maybe not doing those home renovations, maybe not doing more of these projects. That there is, that concern here. Does that continue to go into other retail here? Potentially. Quarter was not good though. Guidance, to your point, you never want to see sales going down 2 to 5%. It's one thing, to see sales, growth slowing. It's another thing to actually see sales decline. You don't want to see sales decline, but they are blaming the lumber deflation as the number one issue for it. And, lumber isn't going to stay down forever here. It's pulled back so much from where we were. So some of this is not surprising.
Wow, someone got really, really excited here, and they took this thing on the downside. They took it to 272.72. I don't have any kind of reference there. That takes out the low of the move. Well, I've been going on the monthly here. You had a monthly low at 77.50. That's going back to November of last year. So now that the dust is settled, and now we've popped up nearly to in the 283 handle, I'd keep a close eye on this 277.50. If you're looking to buy a pullback, it's going to take one big old seller and one big old weak market to knock it down to that pre-market low. Coming back on the upside, don't know if you're going to get a look at the bottom of yesterday's range at 286.94, but way off the pre-market low by a wide margin. Lows, which I own, makes me have a second thought about keeping this one. Lows getting hit. They usually report the day after. So low bar set here, maybe by Home Depot. I
I
have
don't think
noticed.
Lowe's is on the schedule this week, and I was looking
No.
for it, unless I missed it. I
Okay.
don't have it written on my sheet. Aaron, do you have Lowe's reporting?
We got it for you in 3 seconds.
He's going to grab when Lowe's reports. Usually you're right. It usually reports a day or two after Home Depot, but I don't have it on the schedule for this week.
Okay. Yeah,
So
maybe
it was the
changed something.
Truest analyst. My
I've got-
apologies.
I've got Lowe's available May 23rd pre-market, so a week
we're going
from
a week
today
later.
pre-market.
Huh.
So next
Definitely
next
set
Tuesday.
the bar lower. Definitely, Joel, you're correct. The bar will be really low for Lowe's, so keep that in mind. It was Truist analyst Scott Cicerelli said the results were widely expected, and this will help to reset the bar, this results. So Jeffries was actually commentary on the Amgen deal, which I was getting confused. So my apologies, Jeffrey. It was Truist that had those comments coming from the Home Depot report.
So okay, if the story this morning is that the market is down on Home Depot's news or Home Depot's report, but Home Depot's report was priced at, like it doesn't really make much sense to me that it was priced in for the stock for Home Depot stock itself, but not for the overall market. If the overall market, I mean, I guess the market's not down too much. SPY's down what,
Not
2/10 of
much
a
at all.
We got a
we're
number of
basically flat.
we got a number of stories here that is not helping. I think another reason the market is down here this morning, another reason the XBI is down here this morning, is there's the potential merger of Horizon Therapeutics, which is HZNP, that is getting bought by Amgen, which we've known. Risk Arbs had this thing, it was a cash deal. Risk Arbs had this thing, priced just $4 below, so not expecting any problems here whatsoever. Rumor has it from Reuters, nothing confirmed here yet, that the FTC will try to block this deal and will actually file to sue to block this deal. This is out of the blue because I believe the HCNP takeout price was 116. So risk arbs were pricing in just the time value of money to get this deal done. And now all of a sudden it's like, no, boom, they're going to block a smaller pharmaceutical deal. I mean, if they're having problems, if the FTC is going to come in and start blocking these smaller deals here now, that's scary for all M&A action. And so actually, if you look at HZNP, you can see substantially down $20 here this morning. Again, nothing confirmed, so this deal could still go through. And now there's 25 points on the bone. So as this continues to leak down, it becomes more attractive. But now you have repercussions all through XBI. Check out CGen this morning. Nothing was said about SGEN. We know Pfizer is buying SGEN, but it is down 12 points here this morning because they're like, holy crap, if they're going to block HZNP, they might block SGEN too. And then the XBI, which we know we've had a lot of smaller, pharmaceutical companies in speculative mode here, driving the recent price action in XBI. It is trading down 2% here this morning, a little bit because HZNP is in there, but more so that the speculative bubble of M&A action in the XBI is starting to come out here this morning. So very worried, very worrisome that the FTC is going to be this aggressive.
We talk about this a lot of times going to the HZNP. I mean, you get these kind of pops in the stock. You were up there. Look at all that time you had to sell that between 110 and 112. Yeah, maybe you're leaving a little meat on the bone if that deal actually goes through. But look at your risk. And now what do you do? I mean, it's still way above. It hasn't filled the gap from from when the initial news was announced. Absolutely in no man's land here is for the technicals because you have major fundamental news behind it. But holy mackerel, this is not good for the M&A market, as you mentioned. This is not a huge deal. XBI, people are going to be caught in this one a little bit. You had a nice, that you would say, look at yesterday, like what a nice looking chart. Look at that nice rally yesterday. And here you are. I would keep an eye on for that XBI. You're trading at 85.74. You just nicked yesterday's low here a little bit ago with pre-market trading. 85.57 was yesterday's low. 85.57 yesterday's low. Pre-market low right there. 85.46. Bulls need to step up. We're getting another leg down here. I think it's some retail sales numbers. Do you have Dennis? Watch out here. Watch out, Dennis. You got some retail sales numbers for me, Aaron? I missed that. I've had it on my sheet too.
Yeah, retail sales month over month, 0.4% versus the 0.8% estimate. Or wait, that was month over month. But U.S. core retail sales month over month for April, 0.4 versus 0.4 estimate, which is actually up a lot month over month. But I'm seeing this one number on Benzinga Pro, retail sales 0.4 versus 0.8% estimate. So if that's the case, it came in.
It's light, big time.
It came
0.4. Yeah, our estimates here for April were 0.8%. It came in at 0.4%. That's again giving more weight to the consumer is slowing down here. So we get two data points here, one from Home Depot, which maybe was widely expected, but now you see it in retail altogether. That is a light data point here. That's, soft landing, and obviously this is what the market has been banking on. That's somewhat concerning here. But again, now do you go and find the silver lining in this and say, no, this is what we need because this will cause the Fed to pivot sooner. And this means we're not going to raise interest rates. So if you're a bull, you can gravitate that silver lining and say, this is exactly what we needed because this will stop the Fed. And the Fed's plan is working, and then we can start lowering rates, and then we can start getting off to the free money party here again.
Yeah.
So if you're depends on perspective.
So if you're a bear, you can look at these numbers and say, look, the consumers clearly weakening. We could be heading toward a recession. Home Depot's numbers were terrible. The retail spending was down. But your point, Dennis, is that if you're bullish, you can look at this and say, we're now closer to the Fed being able to cut interest rates. A weaker consumer should also mean a drop in inflation, which should get us closer to that point where the Fed can either completely stop raising rates or even cut. So it's something for everyone. Whether you're bullish or bearish, you can look at these numbers and try to spin it to fit your side. But that doesn't all matter. It matters how the market is reacting to it. And right now, the bears would be more happy with how the market's reacting to this number that came out.
That. I don't know. I think if you're a big bear here in the market, you're looking at what's going on. We're like hanging out near the top of the range. Really, let's call this 4140 area. I'm almost like so tired of looking at it. The high close of the move is 4188.50. You haven't touched the low from the last 2 weeks. You know what I think's frustrated? I think the bears are frustrated, and I think the bulls are frustrated.
Everybody's frustrated.
That's what you got in the market. Look at these monthly candles here on the bottom right chart here. No one knows what to do. Your April, which was one of your absurdly lowest range months going back to July 2019, and what are you doing in May? You're doing the exact same thing that you did in April. This market is frustrating everybody except the option sellers. And if you're selling options, now you finally get an uptick in volatility.
Not getting as much premium as you were.
No.
I mean, but weren't there a lot of people, and I'm sure you guys had people on the show too, that like a year ago were kind of calling for this, saying that they think the market was just going to be moving sideways for a year. And I think despite that, a lot of people like said that and had that prediction that, okay, we might just be kind of crab walking or moving sideways for a while, that like it's almost impossible to play, it seems like, as a, investor or trader, that if we're just moving sideways, like you guys just said it, probably selling options is your best bet in a sideways market. And making some money, but it's been, I think, like you said, frustrating for bulls, frustrating for bears, despite the fact that you had a lot of people basically predicting this, that we'd be, trading sideways for a while.
It was
you. It was you. It wasn't people that.
For sure. I've been calling for a sideways market here for a while. And obviously, the regional bank situation happened. I was selling options. The regional bank situation happened. I was like, oh boy, now we're going to maybe just tank instead. And then the regional banks, situation has subsided, and we just see sideways action. It's like the algos want this, Aaron. I mean, even today, you think Home Depot, retail sales disaster, you think this is going to be the day that the Bears are going to win. But no, they just gravitate to other stocks. So it's like they want to keep the S&P almost flat. So what they do is if this sector is weak, we're going to buy this sector. And rotation just keeps the market elevated. And that is what has been the life of this market. I mean, if we look this morning, there are a lot of stocks trading higher, and quietly the regional banks are having a decent morning here as well, probably because of Michael Burry yesterday. But, maybe the vote of confidence in Capital One here helping some of the regionals here too. We also had some news in WAL. It's trading up as well. So regional banks a little bit strong. Banks holding on okay. We know Google is up a little bit. Tesla's up a little bit. If I'm looking through, AMD's having a decent morning. It's trading in the green here. So there is pockets of strength here. I'm looking, I've got, the majority of the major components in the S&P on my screen here right now. I'd say 2/3 are red, but there's probably a third of them that are green here this morning. So they just find reasons. They find other stocks to gravitate into.
Okay. Yeah, maybe. Oh, sorry. I was just going to say, and maybe today, because we had this kind of weaker Home Depot, slowing to the consumer, maybe tech or more like growth is something that people will float to today, just because
I think so.
the real value economy, if you will, quote unquote, looks a little weaker right now. So maybe that the different sector people are looking
Well,
for
and
is
let's
tech
think
today.
about this too, Aaron, just from a fundamental standpoint. Who wants rates lower more than anyone? Tech. I mean,
Right.
that is, especially some of the growthy tech names, because as you get rates coming back down or Fed pivoting, those future earnings, look more attractive there. So I think, you're spot on here. I do think if you're going to see rotation, we don't know, maybe we're just going to get one of these days that just everything sells off. But right now, I'm seeing this morning pockets of strength already. Like I said, Tesla still in the green. AMD is in the green. Hewlett Packard, which Warren Buffett had a stake in there, so that's why HPQ is trading higher. But I'm seeing, Google was green, maybe it was Ackman, but I'm seeing Microsoft is only down 0.07%. We know it's been
Same
a source of
story.
strength.
The same
Apple
story.
is only down 0.15%. The QQQ, just bring it up here, we're down only 0.17%. So stronger than the S&P.
Yeah.
And that's showing you this rotation still happening. So despite looking like a retail disaster today, if you just took it at face value with Home Depot, and now these April retail sales being very weak, the market's still finding the silver lining. And that silver lining is that this Fed has caused this, and this Fed will end this sooner than later if we keep getting weak data.
Take a look at the triple Qs here, Dennis. I got a 4-star for you. Look at this 327 level. Look at that. The last 3 daily highs, 26.75, 27.17, and 27.03. So boom, boom, boom. Keep an eye. 327. That's a 4-star. But we got a guest to bring on here. It's 8:38. We're going to bring on Dan Pepitone. He's the CEO for TradeZero Holding Corp.
Let's go ahead and get Dan on the show. Dan, how are you doing today?
Good morning, fellas. Wow. Mitch is not at the controls this morning. There's no intro. We look a little
what happened here?
unsure of how to bring us in.
Yeah,
the wheels came off without
Mitch is
Mitch.
going to be away later this week, and we were giving Aaron a trial run here going. Mitch is actually still hiding in the background here, but when we lose Mitch for a few days, what's going to happen is we're going to have no Mitch and no Joel. So we're giving Aaron a little trial run here today, and he's doing a pretty good job here. He's
except for that part, Dan. I couldn't, but so you got the short end of the stick there. So I'm sorry about that, Dan.
No pun intended. Yeah, no problem, guys.
Hold up. Let's run this back. TradeZero Tuesday.
There he is.
Gets my head bobbing too, that music.
Yeah,
I told you he's hiding in the background. Gets the blood rush, gets it going. Dan, what's getting your blood pumping here today?
I did, first of all, enjoying the discussion as always. I did miss the first few minutes of the chat this morning, and it almost feels as if it's kind of the quiet before the storm. We know what we have right now with the debt ceiling discussions and the implications related to that, although oddly enough, I mean, I just don't see it matriculating over to the way that stocks are trading in the last couple of weeks. And it should be interesting to see what the next 2 weeks looks like, as they're predicting to run out of cash by June 1st. And so, a lot of these stocks that are, the financials and the like are really behaving in a way as if this kind of wasn't an overarching theme right now. So it's going to be interesting to see. I think that the volatility is going to be coming back in a fairly big way. The VIX at 17 yesterday. We got a note from our clearing firms a couple weeks ago to be prepared for continued volatility of the VIX and having that really trade in the mid-20s, which for traders is a great thing. We love the volatility.
Yeah.
But for investors, I think you guys hit it on the head this morning with stocks not really moving much. And one of the things I did want to talk about today was writing calls. I've been doing it myself for the last few months. Same 2 stocks, Tesla and Amazon. They haven't done a whole hell of a lot. They've been range bound for the last few months, and so it's been a great way to continue to participate in the markets. Not get frustrated with the positions not really moving on the upside as I've been investing in them, but a way to kind of generate some income as we go and And while the premiums may have gone down a bit, we're still seeing some thick premium in Tesla on the weeklies. Looking at the Tesla 175 right now, the May 19 175 calls yesterday closed at $1.02. You're not lighting the world on fire, but with 500 shares and bringing in $500 a week, it's not necessarily a bad thing. And being that the stocks have been range bound, it's a great way for folks to continue to interact, continue to potentially generate some income, while we wait for things to kind of pick a direction.
You like to go far. You like to do that. You like to pick on the weeklies. Do you like to go farther out than that?
You know what? In a very unscientific way, fellas, I'm looking at where I feel like the premium is best as it relates to the time between now and expiration. And this week I do. I'm selling the May 19 Tesla 175s, and it's weird because you look at the May 26s. I was looking at this morning, and it almost looked as if the weeklies were performing better as it relates to premium than the bigger contracts.
Is this against a long position, or are you just like
Yeah, it's against the long
okay,
position in
okay.
Tesla,
Calls.
and so
okay, that's a whole different thing, right? When you have the stock and getting a little bit of protection, do you try and if you're worried about a stock long term, and right now Tesla's kind of in a trading range, would
Yep.
you ever take any of that premium and buy some puts, or do you just like don't want to get too fancy? You want to
that
bring
is
in that call?
maybe above my pay grade at this point. Obviously,
Okay.
our platform does give you the ability to do all that stuff. From just talking from my own personal, trading and the small account that I use to, and the other thing too for me is, this starts to become a distraction during the day. I have my job to do and the company to run and all that stuff. So whenever I start getting too fancy and too involved, it sort of takes my focus and misdirects it. Right. So I like having the positions on. I like knowing that I'm involved, but it's not something that I could spend, even a half hour a day looking at. I just don't have the time.
I mean, if you're in this position where you think the market's going to do a hell of a lot of nothing going forward, and that means a sideways market, there's nothing better than writing premium because,
Yep.
You just sit here and collect, like you're saying, collect $1 a week, another buck, another buck, another buck. That starts to add. You annualize that on Tesla, you get up to 30% a year for the stock do with
That's right.
nothing. So, I mean, it's a way to make your stock pay.
And if they take it out on you, it's obviously going to be at a price that's at your strike or better. So the downside is on a Friday you get taken out, and Monday the stock gaps up 10 or 15 points. But outside of something like that happening, it's a fairly safe bet, and it's a nice way to continue to generate income on the position.
So Dan, when you're selling calls on a stock like Tesla or something, so for I've never just outright sold options, but I know you can set yourself, like if Tesla just like runs and runs and runs, how do you hedge yourself against that?
Well, so you'd be long the stock and you've sold the option, so you're hedged intrinsically by doing that. I'm not talking about naked shorting of options. That's a whole different other animal. And you need a lot of capital, a lot of experience. That's the highest level options approval. It's called options level 5. It's not something that we typically do for folks. It's more of a sort of institutional ability, I would say, in the retail world. It's not something that's fairly common, but selling that call and being long the stock, they're going to move against each other. And at the end of the day, because of the time value of the option expiration, you're hoping that the stock will hover around or below, right below your strike as you move into expiration, so they can fully collect the premium. As the stock goes down, the option price is going to go up because you're selling the call. And as the stock goes down, you have that protection of the option moving up. So it kind of offsets your losses on the long stock position.
Got it.
Dan,
or go ahead, Joel.
Dan, I was just going to ask you about like the market, just overall. And Well, what's the catalyst to get us out of here? One way or another. I mean, traders we want the market to move. A lot of people have been waiting, for the next, shoe to drop with the debt ceiling. We don't hear anything about the Russian-Ukraine war. We don't know what China has up their sleeve. I mean, what?
Supposedly they're flying to Ukraine today and to kind of enforce their peace plan of letting Russia keep the territory and ending things. But yeah, I mean, look, inflation, inflation, inflation. It's
Okay,
interest rates. It's, as you guys were just talking about earlier, it's getting the signals from the Fed, having the
okay.
consumer slow down and having that be a leading indicator to them hopefully, tightening the noose on the rising interest rates, giving us some relief there. And hopefully that is the catalyst to kind of bring folks back into the fold.
You have a technical level that you're looking at that I don't know if you're like the Qs. I mean, like I just looked at the Qs and I'm going to definitely keep them up on my screen today because that's something that 327 level. S&Ps are just grinding in a range. I'm just looking at the weekly high and low. Do you have a trigger or what is your go-to index?
325 on the Qs, I think is a base that we've kind of seen. It's kind of traded against that recently, bounced off that. That's something I would look at. But again, it's reading the tea leaves on a daily basis. Waking up early and kind of understanding directionally where the day may take us. The
Uh-huh.
the consumer spending number that you guys were just talking about this
Yep,
morning. It was almost as if I was just watching Tesla. It kind of dove about a point and then just sort of bounced
come
right back.
back.
So, again, combined with the Home Depot numbers, it'll be interesting to see what happens with Lowe's next week. I think that all of these interest rate hikes that we've endured are really starting to hit home for folks, and it's showing up in their spending.
What? But this rotation here, Dan, and we were talking about this before you got on, seems to just keep the market elevated. I mean, today is a fantastic example. You get a Home Depot report that is very disappointing, really, but then some people are saying it's expected, but the stock is trading down almost 3%. And then you get April retail sales coming out very light. Yet the market really, S&Ps especially,
Yeah.
just kind of sitting here saying it's okay because, if we do get light data, that just means the Fed is going to pivot sooner.
Right.
It's like this market is just built to go nowhere here right now. And I mean, this actually helps your strategy of selling calls. I love your
It
strategy right
does.
now
It does.
because this is the type of environment this works best in. But it's like the rotation almost wants this to happen. It's like the market is built right now, I feel like, to go nowhere. What
Yep.
changes that?
What changes it? I mean, I wish
Maybe
I
it
knew.
doesn't change. Maybe you hope it doesn't change. So you just collect
Well, you know
premium.
what it is? Well, what I've noticed, listen, doing this a long time, what I've noticed is when and if we start talking about a strategy that's working right now, that's usually the time when things start to
That's not
change.
There
You
you
know,
go. Yeah, it's
historically speaking, that's
True.
been, a leading indicator has been when everyone is piling into something, you really should start thinking about doing something different, contrary into that. And time and time again, it really has worked out in that way.
So Dan, before you hopped on, I mean, we were talking about how the market's kind of been moving sideways. For bulls out there are hoping that the Fed's going to be able to cut interest rates or say they're done raising interest rates. What are bears looking for right now in this sideways market? Like, what could bring that break to the downside that you think bears might be out there looking for right now?
I think more inflation, more interest rate hikes, continuing slowdown of the economy. And then there's sort of those macro factors. I mean, if the June 1st day passes without a extension of the of government spending, then I mean the implications for that are widespread, massive, and you talk about a recession, I think it would be almost instant. They're talking about millions of job losses potentially, and really putting us into a recession comparable to what we experienced during 2008, 2009.
Yeah, but so that's interesting to me because, like, if for example, if inflation were to increase from here, that would likely be on the heels of good economic activity, more spending that would drive inflation higher, or you would have worse economic activity, a weakening consumer, and then inflation would end up dropping. But then it would be like, okay, we're heading toward a recession, which is why it seems like we've been so range bound, because the weaker the economy is, okay, now the closer we are to cutting rates. So it seems like bears are just kind of stuck in this spot right now. I mean, what do you
As are
think
the bulls.
As are the bulls, right? So it's kind of the both we're both bulls and bears are dependent on the same thing in terms of the Fed right now. It just all depends on how you want to look at it. Any particular like names that have had super high short interest? I mean, Tesla is always one that's getting shorted a lot. But any other ones sticking out to you?
For us, I mean, there've been a bunch of these small cap gappers like GSIT, TOP kind of has been popping back in and out of the top list every day. A few other small cap names, I don't have them right here. SILK, XCLA, SoFi has been an interesting one lately. But those have been some of the tops that we've that have been trading on the platform over the last few days.
Got it. Good to know.
All right, we've been on the line with Dan Pipitone. He's the CEO of TradeZero Holding Corp, joining us here on Pre-Market Prep. Dan, a pleasure as always getting your perspectives on the market.
Fantastic day.
Talk to you next week.
Thanks, man.
All right, guys, that was Dan Pipitone from TradeZero. Joel, how about a quick market update?
We're leaking. We're leaking here. Yeah, we're leaking.
Uh-oh.
Yep. The combo. Yeah, the combo is the Home Depot. We're worried about the consumer. And then you get that punk retail sales number here. We are approaching the pre-market low of 35 and a quarter. If you want to follow the script from yesterday and the day before and the day before the day before that, I'll sell off and then they'll catch a bid around quarter to 11, rally back. I mean, that's been the script. And, you know, you expect the same thing to happen. It doesn't always happen. But boom, 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 boom. You know, that is that's a look at the markets. Triple D, what do you see in the stocks?
It feels like we're still going sideways. And I mean, that means you've got to be fading moves. You get these dips where you eventually leak 40, 50 handles in the S&P. It seems like a buying opportunity. You get these rips where we rally 40, 50 handles. It's been a selling opportunity. We've been saying this on the show for a while here now. We keep going nowhere on the S&P, and maybe this nowhere is where you want to be. If you're doing strategies like Dan is, where you're selling premium, this is exactly the market that you want. So, I mean, and there's an argument here, too, as we get more options, you know, and as they have daily options, you know, like, does that reduce volatility? You know, like it does. I mean, as you have more open interest, it does. We know it works to reduce volatility as well. But the rotation is really amazing in this market. And that's why the S&P sits here and doesn't go anywhere. You know, we can argue, are we in a bull market? Are we in a bear market? Clearly in a bull market in the Qs, clearly in a bear market in the IWM, clearly in a sideways market in the S&P. We are in the exact same spot. If we go back to May 16th, 2022, we are almost in the exact same spot we are today. I mean, how many times we touched over 410, you know, on the S&P? So many times. Look at that chart, Joel. If that ain't a sideways chart, I don't know what is. That looks completely sideways to me. I mean, where were we on May 16th, 2022? I'm just eyeballing it, but it looks like about 408 on the SPY.
Yeah, May, going back, what's today? Today is the 16th.
Yeah.
We were a tad lower. We made a high at 404. We closed at 400. But
going nowhere fast.
Considering a year, I mean, up and down and all around. But
if you're buying options in this market, you know, unless you think the world is collapsing and you're buying banks or puts on regional banks here, it has just been a losing trade. I mean, Dan's on the right side of this. Selling premium has worked here for a while, especially on the S&P, because we're going nowhere. I have a long-term Qs position. What I've done is I've written calls against it. So I am doing some call writing here just to make those positions pay. It does help to a certain extent, especially if it continues sideways. If the market does go up on you, get called away, but then maybe you get a dip and you reinitiate, and then you do it again. So there's money to be made writing options in a sideways market is the best for it.
Yeah, so I mean, clearly this morning's price action is an example of why bears might be so frustrated right now. You basically had a perfect storm of bad news between Home Depot's terrible earning, the weakening consumer, bad retail numbers, this regulatory scrutiny in the biotech space. And regardless of all of that, the S&P 500 is down about 0.3%. So if you're holding puts overnight on SPY or anything, chances are you're not going to be making a ton of money, and yet you're looking at all this news being like, oh my God, how's the market not down? The last thing I mentioned there, the regulatory, them blocking the deal on the Amgen merger. I was looking at Amgen. Amgen stock is actually trading up a little bit. I always like looking at how the company that's doing the acquiring is trading.
Yeah.
Something that struck out, or that stuck out to me a few months ago, was, remember the Adobe Figma deal?
Oh, you're taking us back a little bit here. Yeah.
So Adobe agreed to pay like $20 billion for Figma, this software company, and it was interesting because a lot of times when they announce these acquisitions, the company that's doing the acquiring, it trades lower because they're spending a lot of cash or doing some stock option or whatever. So Adobe traded down on the news that it was acquiring Figma because I think the market was saying, okay, Adobe's overpaying for Figma, all this. Adobe traded down. Yeah. Then a few months later, the deal got blocked, and Adobe traded down again, and it made no sense because you were like,
I do remember that
because you were like, wait a second, if the stock traded down because they were overpaying, you didn't like the deal, and now the deal got blocked, shouldn't the stock come back up? But no, it went down again, and they were like, oh, now the deal's not going through, we don't like this. It was like, wait a second, you guys didn't even like the deal 3 months ago.
Yeah, so it should be trading up on it. And Amgen is trading up slightly on this here, obviously because they think they might not have to put that premium out there. Maybe they did feel like that they were overpaying for it. I mean, I don't think it's surprising if Pfizer actually would trade up. I'm long Pfizer. If Pfizer traded up on SGEN potentially, because Pfizer traded down on that deal a little bit when they announced it. They paid a pretty big premium there. And SGEN, now no news on SGEN, but obviously risk arbs are taking off because of the HCNP risk here that they're saying maybe this deal doesn't go through here either. And SGEN is up down 5% here today. So there is a point there, but that Adobe one was just a weird situation there, Aaron.
Definitely. Like I said, it's all because the company that's getting acquired, either moves up if the deal goes through or moves down if it doesn't go through. But it's kind of interesting to see how the other stock moves. Joel, do we have a couple minutes we could do ticker time?
Yeah.
I just want to make one more point there, and I don't know if Joel, if you were going to make this point here too, but I think
you are.
I think the point here, and Joel had made this point to me just earlier before we started the show, is on these M&A deals. I think you've got to ring the register on the announcement, because if you sit around, if the deal potentially gets blocked, like just think about it, you're sitting around in HCNP for the last $3 or $4, and then boom, you lose 25. The risk reward just says don't sit around for the last few dollars, especially with this FTC that looks like they're going to get more aggressive. Deal gets announced, get out while the getting is good. I mean, I had this situation with iRobot. I was long iRobot, my long-term account. Amazon bought out iRobot back in, I believe it was, I'm going to say August of last year, and the stock went from 41 to 60. I sold that day. The stock is now back down to 33. The deal is still on the table, believe it.
What's going on with that?
They're obviously thinking this deal is going to get blocked. This deal is not going to go through. I don't know if it's officially off or not, but it just goes to show you, in this market, with an FTC being more aggressive, take the money while you got the money. Don't sit around and wait for the last 3 or 4 points, because if you sit around, the risk can sometimes be a hell of a lot more than the reward.
You put your money to work somewhere else too, if anything. So we got time to take out 1 or 2 tickers here. Is there anything jumping out at us in the chat here? Anything? Triple D, any stock you want to take a look at here? What's going on with the chat? OKE, Kramer talked about it last night. Dennis, did you catch that?
Yeah, he was talking on lightning round. He said OKE was a buy for him on the lightning round. Again, this shows the environment where retail has really struggled, because Kramer, if we go back to 2020, 2021, right in the height of the retail frenzy, Jim Cramer mentioned a stock and it popped 3, 4, 5%. Yep. He mentioned a SPAC and sometimes they'd go up 20% on the Jim Cramer mention. It was incredible. It is absolutely crickets for all of these Jim Cramer calls here now. There's almost zero action because I track it and I watch it. And a lot of times he'll mention a stock and say, yeah, I'd buy it. Not one person in the after hours comes to buy it. Not even one person. Sometimes there's zero trades afterwards. Now, again, he still has some influence, and sometimes he can turn a stock around, a stock looking for direction on earnings. There can still be some movement there as well. But the Jim Cramer effect right now has never been less in my 23 years of trading. I've never seen Jim Cramer have less influence than he does right now. So, it's absolutely incredible. And that is showing you that retail is really quiet here.
Well, I was going to say, Dennis, is that to you, do you think, a reflection of the fact that Cramer's standing has fallen out among retail investors? Or do you think that's, or do you think it's just there's no speculation out there? Like in the 2020 markets, when there was a bunch of speculation, if Cramer mentions a stock, maybe a bunch of people go out and buy it. But right now, there might just be a little bit less speculative buying out there.
More the latter. I think
okay.
That's the speculation has come out of this market. There's still pockets of speculation. You see, it seems like, the Reddit boards grab a hold of something and they go. But it's more pockets. It's not in everything. And I do believe that retail has struggled in this environment. They had a lot of these nosebleed Cathy Wood type stocks, and their portfolios got decimated. Now, there's some great, fantastic retail traders out there, and we have a lot of them in our chat here right now. So, some of our traders, some of the retail traders do really well. But overall, retail has struggled in this environment. They struggle in a sideways environment. Think about who's buying these options, all these options, these weeklies. It's typically retail. So, where Dan Pipitone's there selling premium, he's selling on the other side of that. It's typically, usually, and maybe there's a market maker making a quick spread in the middle, but typically on the other side is really going to be a retail trader, maybe making a speculative bet. And eventually that, that doesn't work out for the most part. So it's been an environment where retail has, struggled, and that is showing up from, on CNBC, where you can clearly see that Jim Cramer just doesn't have any influence hardly at all right now. And again, I've been trading the Cramer effect for 20 years. I've never seen the Cramer effect
there.
less.
Just not that speculative fervor that we had in 2021. All right, I'm gonna skedaddle out of here. S&P's down 10.5 handles, 41.39.5 off the pre-market low. That pre-market low 35.25, folks. I got nothing for you there. We have the low from yesterday is the next thing that will come into play, and that Monday's low came in at 41.23. The all important last week's low that was made on Friday, 41.11.75. I don't know if we're going to see. We had an inside day yesterday. Can we have another inside day today? A double inside day will set things up for an interesting Wednesday. Good job today, Aaron, breaking you in. So everyone, have a great day, and back with you later on.
All right, thank you, Joel. Thank you, Dennis. Dennis, we'll be back live tomorrow morning.
Yeah, sounds good. We'll be here.
All right, we'll see you then. All righty, guys, thank you for hanging out with us today on Pre-Market Prep. Thank you for hanging out with me, specifically filling in for Mitch. A couple, little hiccups here and there, but overall, hey, we made it through it. Stay tuned for live trading. Money Mitch will be live with Zunaid and Ryan Faluna starting here in a few minutes. If you guys got more tickers you want to check out, make sure to stay in the chat. This stream will automatically redirect you over to live trading. You do not need to go anywhere. I'll be hanging out there in the chat as well. I've got some live trades to manage myself when the market opens here in 25 minutes. Again, thank you to everyone hanging out with us. Smash the like, subscribe to the channel if you have not already. We'll be back live tomorrow morning and live on live trading with Benzinga, the small count challenge, starting here in about 10 minutes. Do not go anywhere.